Hi, this is Jack from Alpha Charts with a state of the market video. Today is September 11th, 2021. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my channel. I really do appreciate that, and thank you for doing that. All right, let's start with some charts. Here's the SPX, like we always start with, and this is the trend line that I am watching. As you can see, this week we kind of rolled over and now are touching that trend line again. So the question now is, does it hold like it has in the past 3 prior times? Is this the 4th time that it holds, or do we get a waterfall or cascading effect going down? Again, some light distribution in here, nothing crazy, but it's there, so there's something to be aware of. We won't know until next week, obviously. And September is seasonably one of the weakest months of the year, or the weakest month of the year, so it's a tough time of year also. Definitely something I am watching. Where could it potentially go? I mean, I think that there's a nice, this area right here would be the area that I'd be watching, which is roughly another 4 or 5% lower. 4 or 5% lower, if it even gets there. That would feel pretty rough, but it's not a huge move. It's a normal move, right, for this particular market, but that's a possibility if it rolls over. May not, maybe it goes here or whatever, who knows. But this is a very, this particular area seems like an area that would potentially lend some support, or right there. All right, the SPX, looking at the RSP. Again, RSP looking pretty rough also. This area is a lot closer at this point now. It's only about 1.5% lower from here. And this blue line has always been my line in the sand, right? This 152-ish. That's a big deal, I think, 152-ish. If it gets lower than that, then we could see potentially, false breakout issues. Who knows if this is going to be some kind of topping pattern. Just little things that we're watching. Maybe a bigger topping pattern, right? Who knows? But RSP right now, 1.5% is 152. If it breaks below that, then I think 145 is the next area to watch. Again, not great price action, especially on Friday, especially near the close. Not great. Go moving on. Here's the Qs. Looks very similar to the other indexes. Just extrapolating this particular trend line, we had 2 touches so far. We'll see if we get a 3rd touch or not. Roughly 2.7-ish, 3, we'll call it 3% lower. And not a huge amount, but there is distribution coming in, maybe a little bit right there, a little bit right there. So something definitely to be aware of. Not looking great. Let's look at equal weights. A little bit better, but not still, breaking the 23-day EMA. I'm sorry, the 9-day EMA. 23 has still not been touched yet. Again, very similar look to this. And I bet you it's probably somewhere about 2% to the trend line. Now the trend lines hold, but again, so uptrend is still higher highs and higher lows. But again, there's just some nasty price action. So we'll see if this is just a little check back or if this is a bigger deal. Looking at the IWM, nasty day, 1% day, right? 1% down day, still in the range, still not doing anything. I was really thought we may come all the way up here, but didn't even quite make it up there. I think that's maybe an issue, right? You have lower highs now. Again, it's not significant, but it's there. So now I think there's a good chance that we test the bottom of the range, right? Because again, when you're range bound, you're just ping ponging back and forth. It's at 4 to 5%, right? So yeah, I mean, the good chance we're going to test the bottom, a pretty nasty looking bar right there. Not as much distribution, but it's still a nasty looking bar. So we'll see. I think the path to least resistance is lower right here for the IWM. I'm looking at the growth. Looks just like the IWM basically. This is IWO, small cap growth ETF. And again, it's in a range, looks just like IWM, and it looks like the path of least resistance is lower also. All right. Looking at XLF, so you have this little, I don't know, maybe potential double top, right? If it breaks down below 37 and a quarter-ish, yeah, then you're back in this range. You got this crossover here, good chance, again, this lower, area of potential support. It looks like it wants to get tested again. Maybe it's up short. Maybe this congestion right here, maybe that holds it, right? This 3650-ish area. Maybe that's where we find support at. We don't know till after the fact, but doesn't look great right now. Again, for the next short term, next week or 2 weeks or so, this looks like it wants to come down and test this area right down here. Semiconductors, couldn't make any progress. It did have a green day, right? So that's a positive, right? Finally, we got something that's a positive. It's still an uptrend. Moving averages are still bullishly aligned. If we say semis are a leading indicator, then they're not really saying there's major trouble on the horizon. This is just, normal price action to keep the bulls in check type of thing. Lumber. Lumber created this bottom, started to move higher last week pretty strongly, came back, is retesting this breakout. So this will be interesting to see next week what lumber does, because if it holds the breakout and moves higher, even if the averages move lower, then, this is just a normal, price action. If it comes down and continues lower, then, maybe this will last a little bit longer than what we think. In the end, the long-term bull trend, bull market is still intact. This is just, short to medium term stuff that we're looking at right here. Nothing major catastrophic has happened yet. And you could see that in the bond ratios. So here's the bond ratio. And if there was major problems on the horizon, I really think that we would be seeing, a spike in the bond ratio. And we are just not seeing that, right? We're not seeing anything like this from back in February, right? We're seeing just flat action here. We don't need this anymore. I still think 152-ish, 1.52, 152 is the area to watch. Under that, I don't really care what happens, right? It could just, chop around here all it wants to, come back and retest it from underneath. That's fine. If it breaks back above 152, that gets me a little bit more on the defense, a lot more on the defensive side. But right now, we don't see that. It's just a sideways motion. So the bond market right now isn't worried about the markets in general. That could change next week, but right now, I'm not too concerned longer term. The VIX did have a spike. Totally within character. We've had these spikes before. And so this so far is within character of the VIX. It's still not in a worrisome way, but it is there. So just to be aware of that. And the VIXN, which is the NASDAQ volatility index, very similar to the VIX, right? So we just see that, it's volatile, right? This is choppiness, choppy market. It's all it says. But call ratio, where are people positioning their money? Never quite got to this over bought kind of area, which I consider down here. And now it's kind of reversing. Again, indicative of a choppy market, right? We're not getting extremes on either side. It's just kind of in this, we'll call it bullish range, right? This is a bullish range. So that's what we're seeing. It's staying in a bullish range and no extremes. So what I can say is choppy market, no real signal yet in the put call ratio, equity only. So on the list of concerns, you have the value line geometric index. So breadth. So breadth started to improve, and I was happy to see that. And then it is rolling back over again. Now, again, potentially, if it stands here, great. We have a higher lows, higher low, maybe higher low. But we don't have that yet. So, every time it starts to improve, we're getting these rollovers, That's weak price action, right? That's really weak price action. So that makes me, again, a little bit more concerned with the market. It may be some, more distribution than what we're really realizing, because we get these spikes and we're getting selling into the spikes of the market. So I think there's something to be concerned about there. And again, looking at the percent of stocks above the 50-day, we have lower highs and we have higher lows. So again, a little inconclusive, but again, every time there's a nice little run up, you get the sell off. Nice little run up, you get the sell off. So breadth, again, is one of those things where it's weakening again, and it may be some type of sneaky distribution. We don't know that yet. But it's something that I am watching and a little concerned about. Gold, are we seeing a spike in gold? Nope, gold still sucks. And then looking at just different coins, again, these are just some of the ones that I'm looking at. Bitcoin had the pullback, trying to make a stand here, right near the Fibonacci, not quite down to this level that I've identified, but I see support resistance right in this range. Anyway, point being is that Bitcoin being a risk appetite marker right now, still an uptrend. Nothing that I'm too worried about. I think Ethereum's in here too. There's Ethereum, again, pretty bullish kind of price action right now. If it just holds this area, you got this little cup and handle look on Ethereum. So all the coins are looking reasonably well all over the place. They have the pullback, which kind of stunk, but that's what the coins do. But if they make a hold here, I think that's bullish for overall price action. Bitcoin, Ethereum, and other coins. All right. So let's put it all together. So looking at the Qs, in the end, nothing overly bearish yet. But I am worried about breadth deteriorating again and some distribution going on in here. I'll tell you the way that I am playing this. Basically, as things get stopped out, I'm just holding in the cash. I'm just not allocating those funds quite yet. So for me, it's around 20-25% cash right now. I'm still 75% invested because I'm not seeing huge systemic warning signs, and we don't know if there will be or there won't be. But as of right now, there aren't, in my opinion, especially seen by the bonds, right? The bond market isn't saying, there's a problem. And again, could we get that 4 to 5% pullback in the overall market? Absolutely. That's where we keep our watch list, try to hold on to the strongest names we have, cut the laggards, and then we'll have new capital when this market kind of firms up a little bit. I think Jim Roper called it the best, but he called this a mushy market. It is September. It was September, and even into October tends to be weak markets, and then it kind of firms up, with a Santa Claus rally, whatever, from November to the end of the year, usually firms up seasonally. Again, it doesn't happen every time like that, but it can many times. So again, weak time of year. Holidays are about over, right? All the Labor Day, cruises and vacations are over. So the traders will be back at their trading desks. And I think that this week will be a lot of information. Do we get that cascade waterfall over, or are we going to get, some firming up of the market, after maybe a little more, something like this, right? What is that? Maybe, a little early weakness, another 2%, and then we get a little firm up and things are back good again. I don't know. We'll find out. Good luck this week. I hope this video has helped. Again, if you like these videos, Please like and subscribe. You can also find me on Twitter at AlphaCharts365. Bye, guys.